Hello Trade Pros, Victoria from TRADEPRO Academy, and today we've got another special video for you, and it stems off what you guys heard on Saturday. And today we're going to be talking about the best asset to day trade. So you guys might have guessed it, and I'm going with futures. So I'm going to talk about futures today. Futures contains the best assets to day trade, and I'm going to give you a few reasons why. We're going to talk here in front of this brick wall for a few minutes, then we're going to go over to the computer and I'm going to give you some examples. So, why are futures the best assets to day trade? Number one, they bypass the PDT. So that is the pattern day trader rule. So the PDT dictates that a trader is not permitted to trade 4 or more times in a 5-day period. If violated, the brokerage account has the ability to lock your account. Also, the PDT dictates that you must have a $25,000 minimum in your account to trade. And if that number declines, your account will be locked until the 25K is reestablished. So that's the bare minimum. So this applies to stocks and options. So options, because they're based on the stock and you have to trade the stock said loosely to trade the option. So this applies to stocks and options, making it that you cannot day trade options or stocks with less than 25K in the States. So futures is a great day trading asset because it bypassed the PDT rule. This is because it's considered a derivative. Of course, options are derivatives, but this is a different case when it comes to futures. So futures and day trading futures, you might have 10, 20, 30 trades even a day, let alone 4 in a 5-day period. So with futures, day trading futures, you do not have to have a $25,000 account to do so. You can start with $2,000 or even $500 just enough to cover margin. So that's reason number one, we bypass the PDT rule when we trade futures. Next is the immense liquidity in futures. So I'm going to talk to you about 2 futures assets, and that's crude oil and S&P 500 ESE mini contracts. So both roughly trade on average 1 million to 1.5 million contracts a day. That is crazy liquidity. Liquidity is the ease that you could sell and buy contracts within the market at a given time. So you can rapidly sell and buy contracts at market whenever you wish. Your order will go through just like that within seconds. You're going to be filled. So if you sit at limits, you won't get filled as fast, but obviously if there's price movement and fluctuation, you will get filled. So this immense liquidity offers a lot of opportunity to day trade within that day. So that's why, again, futures are the best day trading asset. Again, the liquidity provides a lot of stability in the market, and there is very little slippage unless you encounter news events, but we are prepared for that. We watch the news very carefully, so we're prepared for when news releases come out. This liquidity, opportunistic, safer, and with the right risk management, can be very, very profitable. So let's go to my computer and I'll give you some examples of high liquidity, opportunity, and price fluctuation in futures markets that make futures the best day trading asset around. Alright, so we're back at the computer here, and before we jump into the liquidity here you see courtesy of the CME group, I want to give you guys a little more reason as to why we do trade ES futures. So, of course, we talked about deep liquidity and a very, very tight bid to ask spread, which can reduce your costs because if the spread is super wide and you enter into a position, you're automatically at a loss. This is minimized by the super tight bid to ask spread. Also, futures trade throughout the day. They only close for about an hour, hour and 15 minutes each day. And there's liquidity all throughout. So between 5 and 6 p.m. is the closing time, Eastern time, of course. And other than that, we have a open futures market. So, of course, the leverage in the futures market is substantial. And you can trade large contracts, large size with a smaller account. Remember, we talked about AMP futures. They do have about $400, $500 per equity futures margin. So you only need that much money to trade one contract. And next, we do have central clearing, which does help you minimize the counterparty risk. So futures are cleared centrally, so you don't have to worry about the other end of the futures contract upholding their end of the bargain. So now that we have those few great reasons as to why we do trade futures and why they are the best day trading asset, let's just look at some liquidity here. So the volume traded on the ES and on crude oil. So right in front of me on the screen, we have the futures in blue and the options in red. So we're just going to be looking at the blue, the futures, how many contracts have traded over the past few days. So this is through all of the expiration: March, June, September, December, and March 2020. So obviously March is the most liquid with nearly 1.5 million total volume contracts traded throughout Friday, February 1st. So right here you can see, if I hover over these little blue tickets, you can see roughly 1.5 million contracts have been traded over the past month, 2 months in the futures market throughout all these futures. And of course, the most liquid will be the current contract expiry. So right here, January 22nd, we almost exhibited 2 mil. Back in early January, 2.36 million throughout all futures contracts. January 3rd, 2.26 million, and so on. So the really high volume traded throughout the day in the futures ES E-mini contracts is a very good sign of liquidity. So there is a lot of people trading this market, institutional, retail, and so on. Of course, the E-mini futures market revolutionized retail trading once it came on board, electronic retail trading. So of course, there's going to be a lot of volume. Next, let's look at crude oil. So crude oil, again, this is the million mark right here. And the expiries go monthly, so later expiries could be a bit more active. Again, this is a hedging market, so it's not purely speculative. People actually use this to hedge their crude oil barrels. So again, right here, the million mark throughout all the contracts, there's roughly 1 million traded. The current contract expiry is just under a million, usually around 700 to a million. So again, futures in blue, but throughout the whole board, we have generally over a million, around a million contracts traded each and every day. So now let's jump into Sierra charts. I just want to show you the range of opportunity that ES and oil represent and present traders with. So on my screen here, you can see this is the S&P E-mini contract on a futures market. This is a 5-tick chart on Sierra charts, and there's just a lot of opportunity. This is throughout the day between 10:30 into the close. This is Friday, February 1st. And you can see there's a lot of opportunity here. Again, this was a slower day by some standards, and we hit the 15 mark right here, 27.15, all the way down to 26.95 throughout a few hours, of course. But throughout that time, there was various cycles of different opportunity. Of course, the 15 down to the 95 about is 20 points. So again, remember, a point on one contract is equal to $50. So catching moves in between those 20 points, fluctuations up or down, would have presented traders with ample opportunity and profitability. So again, alternatively, looking at the oil market here, of course, with the S&P, you'll notice there's no gaps in between the candles here, so price is very stable. And if we open the oil chart right here, again, this is Friday, and you could see there is a whirlwind of opportunity here. Huge sways up and down right here. This is the 55.60-ish mark around here, and just down into this channel, down to these 30s. This is a 30-cent swing. Again, 1 cent is $10 per contract, so it's about $300 of movement within right here. This starts at 120 all the way down into 145, so about 20-25 minutes of work, $300 within this one swing, carrying from the high down to the low. Of course, you can see there are more swings in between, and there is more movement lower. So right here into this previous day high, from these 55.40s all the way down to these 86s, that is a lot of movement, and it happened within about 20 minutes again. So you can see there is no gaps in between candle prices here. So again, liquidity is very tight. The bid and ask is very tight in this market. So guys, I hope you enjoyed this video. I gave you many reasons as to why the futures market is the best market to day trade, and within the futures market, there are two great day trading assets in oil futures and S&P futures. So I hope you enjoyed this video, and get ready for a futures course coming up for you guys. The re-recording is happening tomorrow, February 4th, and will continue throughout March. I hope you guys are excited, and hope you guys enjoy this video.